My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Cramerica. Welcome to Mad Money. Welcome to Dreamforce Conference in San Francisco. Other people make friends. I'm just trying to make you some money. My job is not just to entertain, but to educate, teach you. Call me at 1-800-743-CNBC or tweet me at Jim Cramer. All right. I had to come all the way out here to Dreamforce, the Salesforce Tech Festival, to learn what artificial intelligence is really capable of and what's pure hype. Today, after a full immersion in AI, I feel a lot more confident in sorting out the real from the phony. And I'm thinking, you know what? There's a hell of a lot more phony than there is real. And that's why I want to show you which AI claims are meaningless and which ones are legit. Look, I know this is Mad Money, not Mad AI. On today of all days, I could just focus on the Fed and only the Fed. Whether we'll get a 0.25% rate, maybe tomorrow we'll get a 0.5% rate. Today the average is whipped around anticipation, Dow finishing off 16 points, S&P ending up 0.03%, NASDAQ inching up 0.2%. Stocks were all over the place today as pros seem insistent on gaming the ungameable. But you don't need a San Francisco weatherman to know which way the wind blows. In the end, we know rates are headed lower, not higher. And that's what we need to sustain this bull market. Please do not overthink it. I'd rather focus on what can help us make some money. Like the biggest theme in the world right now, artificial intelligence. Specifically, what the hell does AI actually do anyway? We've heard so much about this AI technology and how it's going to revolutionize everything. Right now, though, we know that while AI has taken the stock market by storm, it really hasn't taken the actual economy by storm. To the extent that there are use cases, they're back office corporate cost saving, nothing flashy, which is why so many commentators now come on air and call the whole thing a bubble. Plus, almost every CEO that comes on the show says they have an AI strategy. You know what? Doesn't it almost feel like boilerplate to you? If they sure aren't getting the return you or I expected, or what, you know what? Or they expected. But here's what I've learned from being out here at Dreamforce. AI is not a strategy. It's not something that makes anything. It doesn't cure cancer. It doesn't create more product to sell. It doesn't even make the numbers for anyone but the companies that manufacture the underlying hardware. NVIDIA, Broadcom, heard from them yesterday, maybe AMD. For everyone else, including the hyperscalers, AI is just a necessary expense. A keeping up with the Dow Joneses, so to speak. Kind of pathetic, isn't it? But I found out otherwise today. Let me tell you what it really does. When coupled with accelerated computing, another NVIDIA innovation, AI makes things go faster, everything. It makes things more rational, everything. And it can make machines behave like humans. Smart, good humans. Let me put it this way. Business wants to make good products and then sell them to real people, real organizations, to you, either for the enterprise or the home. That's called capitalism 101. But right now, we don't have enough workers to do it. That happened ages ago, particularly through COVID. We can't interact because our sales associates don't have time to be anything but brusque or confused. They're harried from the moment they come in to the moment they leave. It's a late-stage capitalist directive. What can I say? It's a walk of life. What doctor has time to talk to you? What nurse practitioner in a doc of a box can give you the time of day? Companies are already squeezing as much as they can out of people in order to make the numbers, to get the stock price higher, to make a ton of money for the execs. And then it hit me as I watched Mark Benioff's incredible keynote today. Mark was describing his new initiative. It's called Agent Force. And I got what this technology can really do. It has time for you. It acknowledges you. It has a brain. It's polite. It can almost always answer your question because there's only so many questions that get asked with any regularity, and it has the data to answer the question. Your data. It actually knows your preferences. It's the perfect way to run customer interactions rather than using humans who can speak unclearly, don't really understand you, are impatient, and are just plain exhausted. See, humans are humans. Flawed, harried, ready to go home. Wish they work from home. Want to be remote. Machines, when suffused with AI, they're delightful, they're smart, funny. Hey, they don't mind going to work. And that's what these AI agents come in. The machines can listen, it can reason, it can send you to the right place or do it all itself. A long time ago, we pretty much gave up on talking to an actual human at a company. Someone, you gave up. You don't want to call. Give me a break. We know better. We know we're just going to get lost in a maze of numbers that are meant to make us give up. Press 1 for this, press 2 for that, press 3 to go to hell. It's like every business in the world knows they can get away with being dismissive because all their competitors are dismissive too. They want to dismiss you. You cost too much. But if you can bring in an AI agent to take your calls, well, that's a customer service game changer. So what AI really is, what it really does, is give us, the client, something better than we already have. It's a retailer, and you've shopped there before. The agent knows all about your preferences, can talk about what you might want to do. The agent can help you return something you just bought. It can be nice. It can ask you whether you want something different from what you bought last time. It frees you from the ennui of a human salesperson. It's never mad or upset. And if you're not satisfied, then you actually can speak to a human if you really still want to. But I doubt you'd want to because, well, the AI agent is just so much more pleasant. It's not just retail. When we look back 10 years from now, I think we'll be trying to figure out why we ever wasted a doctor's time when the AI agent was so much better, so much kinder, so much more empathetic. Doctors instead can see results of millions upon millions of tests, something that might have taken a decade to sort through, and spot dangerous patterns well ahead of when they become problematic. Take melanoma, heart disease, kidney cancer. It's all in the data, but only AI has the time to compile everything in accessible form. We know, and you know, and we can see it out there. Self-driving cars all over the place are much safer and easier than human drivers. They don't drink and drive. They don't even drink. You know that an agent can proofread and correct and never make a mistake, and you do that for the first 2 years when you're in a big law firm, meaning law firms can now hire half as many associates. I know we're devoting most of the show tonight to how we can make things faster and better with far fewer people and a lot less waste, and that's legit. But let's put it all together. If you're running a modern-day chain, hey, maybe you're running a coffee shop with 10,000 stores. Let's just make one up. We simply don't have enough people to get the orders right or make the elaborate drinks correctly. I have now seen machines that know everything about what you could ask for, though. I've seen machines that can make 20 drinks flawlessly at the same time. Why not have 2 lines, the AI line and the non-AI line? Oh, and the mobile order and pay, get the best of both worlds. You don't have to deal with a human when you order, and you don't have to deal with a human who might make your drink wrong. Everyone's happier. Hey, that's a good idea for a major chain that I know. The bottom line, if you give the AI agent, agency to do its job as Salesforce can teach you, it will do the job better than we can in the vast majority of cases. And if it's a repetitive task, though, trust me when I say you'd much rather have a polite and friendly AI agent than a harried, angry, harassed human who really doesn't want to deal with you. Yep, turns out what AI's best at is dealing with other people, because they are the ideal of what we used to expect out of a person when we are about to spend a lot of money on something and we just need a little help to do so. Let's take questions. Let's go to Nico in Illinois. Nico.
Jimmy Chill, it's been a long time coming, so a big booyah from Chicago.
Man, I'm liking that. How can I help you, Nico?
Hey, well, first, real quick, I want to say it's been the 9th time I've been invited back on the show, so I want to say thank you to not just yourself,
Ninth
but
time,
Nicole.
you're regular. You're regular.
I am. Hey, so at Boeing, like I know at Disney, it takes teamwork to make the dream work. And with that having been said, going into this holiday season, do you think the airlines led by United are set up for a liftoff?
Nico, are we traders or what are we all hedge funds? I've been with you 9 times. You know I'm not a trader. Well, TRAITOR or TRADER, like Peacock's got something like that. We want to own stocks that go higher over the long period of time. All right, one of the biggest things I've learned today, turns out that what AI is best at is dealing with other people. Oh, maybe tonight, I'm talking with Salesforce Mark Benioff from right here at Dreamforce, where we'll unpack some of the company's hot off the press headlines that I just discussed. Plus, after they announce a new $60 million high-speed train investment, I'm sitting down with the CEO of Siemens USA to get a read on what's next for the tech company's work in the United States. And later, is Train Technologies, oh my God, another all-time high, on track for more growth? I've got to tell you, I think it sure is. I've got the exclusive with the CEO, so stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com. those who aim high and dream big, a pilgrimage for tomorrow. And Cramer has been there every step of the way, from sales to service, dreaming with a purpose.
Every year we make this pilgrimage to San Francisco for Salesforce's annual Dreamforce conference. I love it here. Brings together thousands of their customers and partners, talk about the biggest trends in tech. Always an educational week for me, checking in with so many great companies. But there's nothing like talking to our host for the week. So we got a chance, yes, the chance to speak to that host, Mark Benioff, co-founder, chair, and CEO of Salesforce. Mark, welcome back to Mad Money.
Jim, thanks for coming again to San Francisco and making the pilgrimage and being here. It's so great to be with you always.
Thank you for being the great teacher you are. I happen to have caught your keynote today. And I have to tell you, and I'm not blowing smoke, I didn't understand AI until I saw it, because AI was what I call an abstraction, some sort of business-to-business thing. What did you say that resonated and would resonate with anyone who was not at this amazing keynote?
Well, I know a lot of customers love AI, but they have a hard time spelling it. And it's just how it is, Jim, which is that they've seen it, they've heard about it, they're excited about it. Maybe they've even bought a large language model. Maybe they have bought, a security system, now hyperscaler services, and now they're going to try to hook it all together, and it has failed them. Yeah, the Copilot experience for so many customers has become the Clippy experience. What I mean by that is they're just not getting the value that they want.
It has not paid off.
It hasn't paid off for them, and it's been disappointing for them, and they've come to this show with that kind of rejection feeling in tow. And I know that because I've been doing focus groups all over the world, talking to customers, and they're like, listen, I'm trying to DIY my AI. That means do it yourself.
Right.
Trying to put all these pieces together. It's too complicated, too sophisticated.
Okay, so agent, it's funny, when I knew I was going to talk to you, and I was seeing your ma, Joe, out there, and I was saying, gee, your boy really kind of figured it out. Because what he made me realize is that Agentforce allows me to be a person, to be acknowledged. There aren't enough people in the world anymore. There are not enough. We've fired so many customer service people. We've got rid of everybody who interacts with us. And you brought them back to someone that is empathetic, sympathetic, and more knowledgeable. It just doesn't happen to be a person.
Well, Jim, this is what AI was meant to be. We want to augment our employees with AI. We want to make our companies more productive with AI. We also want to have more revenue. We want to have higher margins. We want better business results. We want to use AI as a tool to make our businesses better and ourselves better. But it's been too hard. It's been too expensive. And our job is to make things lower cost and easier to use at Salesforce. And we do that through the Salesforce platform. And Jim, on this show, year in and year out, tirelessly since 2008, we've talked about the movement from the cloud to social, to mobile, to AI even, and even to data, but now to agents. And the idea that agents are the way that we're going to be able to transform these businesses and take them to another level.
But agents are getting what we call agency. You have agents that are more knowledgeable, whatever, they have all of your data, so they're more knowledgeable than any one salesperson can be. They are respectful. They are empathetic. Now, can anyone create that? I mean, it would seem to me, did I just see something today that is not replicable, or is it?
Jim, here's the key point. You look at a customer that we have here like Saks. It's a great company. We've all been in the Saks store. It's awesome. And they use our Sales Cloud for clienteling, and our Service Cloud for the service issues, and our Marketing Cloud for their email, and Commerce Cloud, which is how they buy the products, okay, and analytics. We have Tableau and Slack, and we give them a whole platform to manage Saks. This is what we have done. And we've built a data cloud to amalgamate all that data together, and it's been awesome for them. And last night they got here, Jim. Last night they got here, and they're like, yeah, we've automated all the customer touch point. We even showed them our new next generation cash register that they can plug into that, so they have point of sale in their store, and they're like, so excited. Said, now just one more thing, Agentforce on top of that. And we worked with them for only about an hour or so, and we built autonomous agents that are live now on Saks.com that are doing all of their returns and all of their customer service and took all the
things that people got rid of.
Easily.
They got rid of because those people didn't have an ROI.
Easily.
So now we have a cynical attitude toward the hit one, hit two. That's gone. It's not one hit two, is it? We don't do that anymore in your world.
Jim, that's because we have the data, we have the metadata, we have the business logic, we have the workflow, the security, the trust layer is all in our platform. And then, Jim, we can make those customers successful with their customers in these incredible new ways. And it's so much more than just go away with the hit one for sales, hit two for service, hit three for marketing.
That's why I want people to see that keynote, because that's when it hit me. It's like, I don't want to hit one.
I'm so glad you came to the
I'd rather shop
keynote.
somewhere else. But then everyone else has equally horrible service. And then your service comes along, a bespoke non-human.
Look, we had 10,000 people in the keynote room and we had 10 million online with us. Right. And Jim, that is how we're going to have to do this. We're going to have to go person by person, customer by customer, because companies have been hypnotized to think they have to buy a chip and a data center and a database and a security structure and an AI model and a this and a that and all these things, and they don't need to buy any of that, Jim.
No, they don't.
They just need to use the Salesforce platform, and we will deliver the results. And this is what AI was meant to be.
Right, that's the point. It was. Now, does Jensen get it? Jensen Wong, you going to see him?
He's a huge part of all of this, but you know,
let us
about
it. I mean, you know that we've
let us deal with Jensen and build that in at the right level, and then let our customers worry about what they're good at. Saks should be worried about selling us this suit. You know, where I bought these shoes, Christian Dior gorgeous shoes I bought on Saks.com. That is what makes, things happen. I bought that on Saks.com. Perfect.
Well, do you think that people are more comfortable? Will they end up being more comfortable speaking to an agent who's kind when it comes to medical?
Wow, what a powerful thought this is. Our doctors and our nurses are just way burnt out after the pandemic. Nobody knows why. Talk to any hospital, any medical institution, and they will tell you that in these big medical systems, the doctors and nurses are just trashed because we're just so interactive with them now. We have more medical information, more medical records. We're getting our labs done. We're calling them, hey, I got this issue, I got that issue. And they're like, hey, I don't have time for all of this. So we have shown that working with one of the largest in the world, we're not going to talk about the name, that we were able to do the scheduling and other aspects of the patient interaction, and we're going to resolve this doctor burnout issue. By the way, that's very personal to me, as you know, as one of the largest medical philanthropists in the country. I want our doctors to be working on making people healthier and doing great research, not worried about scheduling your MRI and scheduling your labs and scheduling your next vision and answering basic questions about your lab results. The agent can do that.
The agent can do all that.
It's a waste.
The agent can ask a lot of questions.
And we don't have the doctors and nurses to do it anyway.
Okay, so let's go back over.
We can make it so much better.
Well, you are doing a sit down with Jensen.
By the way, these are two incredible use cases. We talked about retail, and now we're talking about healthcare, but we could go and talk about other amazing companies that we talked about today, like Wiley and OpenTable, and we even talked about Disney and how we can automate the Disney experience so much better.
That for people, there's two kinds of Disneys. There's the Disney where you've dialed into what you're doing. Then there's the Disney where you're kind of looking like this, and you really can't afford to do the looking like this anymore.
Jim, I am the #1 Disney fanboy in the world. I go to Disneyland 4 times every year. You know that. I send you my photos where I'm at Disneyland.
I appreciate that.
And when I go, I always have a Disney guide to help me make sure I maximize my time, and I get in 30 rides, and it's the best experience possible. But sometimes, Jim, a ride goes down or there's a problem because safety is the highest value at Disney, which I respect so much. And so they'll say, Mark, we can't bring you to Rise of the Resistance right now. And then the agent, or their Disney guide, is looking at his phone. He runs Salesforce and he runs Slack, trying to figure out where am I going to take Mark next. But now there's going to be an agent on the phone that says, just take Mark to Toontown. That's all Mark really wants. We looked at his ride history. And by the way, you know what else about Mark? He wants to be there pretty quickly. And we looked at the whole flow of the park right now and who's where. And Mark needs to go to Toontown now. And That's exciting for me because
Well,
I
it changes
love
the value
Disney.
proposition.
I love Disney. Like we run Disney Plus service, and
They're all yours.
we
I
run
know.
the store and the guys. But Jim,
Maybe get that stock
but
up.
Jim,
Yeah.
Jim, listen, they're doing a great job in that company. Let me just tell you one thing about that company.
All right,
It
then
is
we're
the
gonna-
greatest brand, but my goal is to raise that customer experience even one level above.
All right, well, I bet it'll get there. Now, one last thing. You did announce Salesforce and NVIDIA for strategic collaboration to advance AI
And I love
agent
that
innovation.
CEO at Disney too, by the way.
Okay, well, that's terrific. God love you. The Salesforce and NVIDIA forged strategic collaboration to advance AI agent. So you'll be sitting down, fireside chat with Jensen.
Jensen is coming here.
Yes, now,
And not only Jensen, my next door neighbor invented the GPU for Jensen, and he's here too. David Kirk is amazing. It's unbelievable.
Well, that's-
their original chief scientist is here. Just serendipitously, he's my neighbor, and I said, "You've got to come to Dreamforce."
well, does Jensen subscribe to the notion that Agentforce is what AI was meant to be? Does he subscribe to that?
Absolutely. I had a long talk with him about it. That this idea of agents, he's been dreaming about this. By the way, these are guys who in 2008 and 2009 invented the next way to do graphics. Right. And do you remember the first time I bought the Switch? And I called
Yes,
you and I
showed me.
said,
You were all excited about the
Switch is amazing.
The
And I'm like, it's
Switch.
NVIDIA. And then who would have thought that this idea that they can do triangles better in graphics
Right.
would become a way to be able to have better large language models? It's a phenomenal act of computer science. But now, the reality is we're going to have much more accurate AI, lower hallucinations, because in the Salesforce platform, Jim, we're looking at
You have
all
the
your
data.
customer
You have
touch
the data.
points. We have the data and the metadata. We have all your security provisions, all your sharing models, and we're going to deliver AI at a rate and speed and quality and capability like never before.
I don't need to be pecuniary, but if you deliver on that, then we get more than a $250 stock price. Fair enough?
Jim, as I've said to you,
So I'm small-minded. I'm a dollar sign represented by a man. I can't help myself. The people who watch actually,
I'm about
they
customer
love
success.
them. They love them. They like
Customer
$300
success.
even more than
You focus on
them.
the stock, I focus on customer
Fair
success.
enough. That's Mark Benioff, Salesforce CEO. Thank you, Mark.
Great to be with you, Jim.
Everybody's back into the
Welcome
break.
to Dreamforce.
Coming up, from high-speed rail to industrial AI, this company does nothing small. Manufacturing and more from the cutting edge. Next. From climate change to high-speed rail, a multinational devoted to the details to make technology sing. Can this familiar name bring unfamiliar prosperity to your investments?
I love coming out to Dreamforce because we get a chance to catch up with some of the more important stories in the world. Take Siemens, the German conglomerate that's a dominant player in electrical infrastructure, transportation, medical equipment, not to mention being number one in industrial automation and industrial software. That includes using digital twin technology. Remember, we learned that when we were out with NVIDIA? As perfectly as possible. They're going all in industrial AI. This German company with a huge presence in the U.S. is in many different industries and has made major investments here, including a high-speed train facility in New York. They're going to use those trains on the rail system that's being built between L.A. and Vegas. Earlier today, we got a chance to speak with Barbara Humpton. She's the president and CEO of Siemens USA. Take a look. Barbara, I see Siemens everywhere, and it's always at the cutting edge of manufacturing. I guess I should have realized you're a 160-year-old startup that is doing fantastic things.
The company was founded 175 years ago, came to the U.S. 160 years ago. And yeah, Siemens is in the backbone of the economy, a focused technology company bringing the real and the digital world together.
Now, we spent a lot of time with Jensen Huang at NVIDIA, and he keeps talking about this concept that no one else I saw using, digital twin. But you have fully adopted. What does it mean for manufacturing?
Yeah, Siemens in 2007, right, the year the iPhone was launched, recognized this need for software and bought the fundamental capability to build a digital twin, right? Get a digital representation of any physical object. In the case of our digital twin, it's the most comprehensive, building in the laws of physics. You can ask thermodynamics questions, et cetera. This is what helps creators decide what do they want to build, how do they want to build it, and then once it's produced, how's it performing?
Okay, so people who are just listening will say, well, why don't you just build it right? What's the deal? In fact, when we build things, we keep changing things, and it gets more and more expensive. Digital twin eliminates the big expense?
Well, digital twin can help you play around with a whole lot of permutations. Before you start to bend metal, ask yourself, how would this perform? How would that perform? Think about the Mars rover. Could not have landed without simulation because you simply couldn't create the conditions of Mars on the Earth. It's tools like that now are changing everything about how we work.
Okay, so let's talk about the divisions that we think are most germane to what we're looking at right now. Digital industries, of which you have interesting vertical end markets, and then smart infrastructure, which you say revenue growth is fueled by strong momentum in U.S. These are the two that I think are so far ahead of other companies. What do they mean to the day-to-day of Siemens?
Well, here in Siemens USA, smart infrastructure is the largest and the fastest growing business that we have. Think about what's happening with the electrification of everything.
Right.
Think about creating data centers. These are the people who make the electric switchgear that makes all of that possible. And then, of course, digital industries. We are at the beginning of the next industrial revolution here in the United States. And it'll be Siemens tools, both automation and the software, the hardware and the software that are going to make it possible for manufacturers in the U.S. to actually be more productive, be more sustainable, and compete well on the global stage.
Too many people talk about, well, what jobs will be lost? I think if you look at the future, and I know that's what you do, you'll see that we don't nearly have enough people to do any of these jobs. If we don't go with Siemens and your digital industries and your smart infrastructure, we may not have the people to fill these factories.
Well, that's exactly right. Right now, there's already a deficit in the workforce in the United States. And here we are making massive investments. Siemens alone in the last year invested $500 million to expand our operations. We need to build more of that electrical switchgear. We need to build more trains. And so all of that is growing.
Let's talk about the trains. I've been to Horseheads, New York.
Oh, yeah.
I know it's not in the sticks, by the way. It's next to Corning. So they have an incredibly good workforce. You're building something major there.
We just announced last week, I had the pleasure of being there with Leader Schumer to announce that Horseheads will be the site of our new high-speed rail factory. People ask, why New York when the first project is Brightline West from LA to Las Vegas? Well, I've seen the map. There's something like 30 city pairs ready to go. And what we found in New York is a 300,000 square foot concrete slab that can hold a train ready to go, and a workforce that is absolutely geared up and ready for us.
I'm so glad you say that, because people just assume that unless it's in a big city or out west, you don't have enough people or the right people. That's just untrue. We get a little more positive about our country. Now, talk to me about Siemens and Salesforce teaming up, because I need to know about the Team Center Service Lifecycle Management.
Yeah, think about this. We are experts in industrial applications, in automation. We get gear that gets sent out all over the place, and it needs to be serviced over time.
Right.
Salesforce is an expert in customer relationship management and the workflows that actually address customer needs. You put these two together, we've applied their Einstein capability to the data sets that are being produced out of our industrial equipment. Now we can actually tailor the customer's experience with AI.
Okay, so does that mean when I look at this next generation that he's talking about, and it's everywhere, Agent Force, are you going to be involved in Agent Force?
We are. We're big believers that agents are going to be a critical part of our future, right? We've got large language models. We've got all kinds of work that's being done to train models. The question is, how do you draw inferences from them? How do you use that for making real decisions in real time? You'll find AI already in use across our own enterprise, and we've created the industrial co-pilot so people can use these kinds of tools to program the automation on a factory floor, for instance.
Okay, now just a naive question, but why did I have to come out here to learn about how pervasive Siemens is in our country?
Well, invite me back anytime. I can't wait
I'll invite you
to
back
talk
in
some more about
a
this.
second, because of your experience. You've had far more experience. You even brought some real security to the Justice Department. You've done a lot of great stuff, and we like having you on. We think you tell a pretty darn good story. This is Barbara Humpton, Siemens USA President and CEO, 160-year-old startup doing some great things. Thank you.
Thanks for that opportunity.
Coming up, how's the HVAC business? It runs hot and cold. Could this clean tech play keep your portfolio on track? Stick with Cramer.
One of my favorite things about this Dreamforce conference is that I get to catch up with some of my favorite companies. Companies like Trane Technologies, one of the leading global players in the heating, ventilation, and air conditioning space. With the Federal Reserve about to start cutting interest rates, I think it's kind of exactly a kind of modernized industrial company. It's worth owning here. By the way, big data center exposure. Don't take it from me. Let's dig deeper with Dave Regnery. He is the chairman and CEO of Trane Technologies. Once again, all-time high. Mr. Regnery, welcome back to Mad Money.
Thanks, Jim. Glad to be back on your show.
All right, so Dave, I think people have to understand that when we talk about buildings, we love buildings, of course, but they turn out to be a major source of pollution, and you are trying your best to stop that.
Yeah, about 40% of all the energy that goes to a building is for heating and cooling. And we know, because we've done hundreds of thousands of energy audits within buildings, most buildings operate inefficiently, up to 30%, even sometimes higher. And what you're going to hear, and you'll hear a lot about it at the conferences, is you'll hear a lot about from, if I was a utility, I'd be talking about supply, and I need to get more power on the grid. Here at data, you're going to hear a lot about data centers. They use too much power and it's going to double. What nobody's talking about is what we call demand side management. And that's the fact that 30% of all the energy that's after the meter is being wasted. And that's why I'm here today, because I want to talk about how an industrial company like Trane Technologies is utilizing AI. If you're connected to the asset, if you're connected to the building, you could ensure that building is always operating the way it's designed. Look, we've been using structured AI data for over a decade. When you take unstructured data and you augment that data layer, it's the amount of improvement that you could have is vast.
Why did we build buildings that were wasteful to begin with?
You know, at the time, I think it was just it's a different time in history, and people, it wasn't top of mind for people. And what happens is, even with new buildings, right? Forget about the old, just new buildings. They'll do what we call drift. They'll degrade performance over time, and within 3 months, 6 months, you start to have a building that drifts. And there's a lot of reasons why. Some of it's mechanical, some of it is human interface. But if you're connected to that building, you could ensure that it's always performing the way it was designed. We say an HVAC asset isn't performing not only if it's not heating or cooling properly, it's not performing if it's using too much energy. And that's the power of what we can do.
So that's also part of what Jensen Huang talks about is the total cost of ownership. And what I get crazed about is Oracle has 162 data centers. They said maybe we need another 1,000, maybe we need another 2,000. Well, what does that do to the planet?
Well, if you think about it, and there's different numbers that are out there, but if data centers use about 4% of all the energy today, and it doubles to 8%, if we could control the 30% that's wasted, Jim, right, that's the bigger opportunity, right? We need data centers. I need that intelligent layer to help us have these buildings operate the way they were designed. And the neat thing about it is this is all technology that exists today. We don't have to go out and create a new technology or try to scale carbon capture. This is technology that exists today. And the paybacks for our customers, because some of these buildings are performing so poorly, it's very, very accretive. Many of our paybacks are less than 3 years. So we tell people it's green for green, right? Right. It's green for the planet, and it's certainly green for their income statement as well.
Well, at this stage, with all the demand you have, does it matter if the Fed cuts rates? Does it matter if we get a little reacceleration in the economy?
Sure it will. It'll be a stimulus for sure, but our paybacks are so attractive right now that it's, with or without that, we're going to continue to be successful.
Did you see this happening? I mean, look, I got to tell you, for years when I heard it was an HVAC company, I yawned. I said, oh, good, well, it's part of some larger conglomerate. And then when you first came on, you taught me, no, look, it's not HVAC the way, it's not just some air conditioner duct. It's a very complex system that is trying to be able to make it so the planet is not choked on what buildings produce. But did you see it yourself when you got in this business?
We always saw that the sustainability aspect of our business had some meaning to us. And the purpose of our company is to challenge what's possible and innovate for a sustainable world. And that's what all 45,000 of our employees really think about. And it's gaining momentum for sure. But I would tell you that, we've had a tremendous success over the last 4 years. I mean, our reported revenue growth on a compound annual growth rate is 12%. Our EPS growth is north of 20%.
No, I mean, you have a much better growth rate than almost all the technology companies that I deal with. They do not offer a product that is at level of demand that you have.
Yeah, Jim, I always tell our team that our best days are in front of us. So we've had great success, but our best days are in front of us.
Okay, the last thing I wanted to ask you, do people, I mean, you've been saying, listen, you know what? I mean, I've been waiting for someone to say, I want to go into HVAC. Do they know that that's where their career should be?
I need to talk to them. We're always recruiting great people, you're more than welcome.
Well, you do a great job. TTT, another all-time high. And it's because of, you know how to save the planet and also make some money at it. Nothing wrong with that.
That's great.
Fair enough. That's Dave Regner. He's the CEO of Trane Technologies, TT. Take a look at this. This thing is like this. Mad Money's back after the break.
Coming up, lightning doesn't just strike twice in Cramerica.
Booyah, Jimmy Chill. Booyah, booyah, booyah.
Thanks for taking my call.
It strikes every day. Cramer is back in a flash with your questions. Next.
It is time. It's time for a very special Dreamforce edition of the Lightning Round of Cramer's Mad Money. After it takes your calls, rapid fire, same name stock. I tell you to buy. So just be good to know the core stock questions at the time. I stand first. The graphics on the 5. Play this out. And then the lightning round is over. Are you ready, Ski Daddy? Time for the lightning round. Cramer's Mad Money. Start with John in California. John!
I have some Pfizer.
John, hit me.
Should I buy more?
Yes. I like Pfizer here. I like the 5.6% yield. I like their cancer strategy. I like what Dr. Borla is doing. The answer is yes, buy more. Let's go to Gene in California. Gino.
Hello, Jim. With interest rates about to come down, what do you think about First Solar?
First Solar is an up stock. I like that. Let me throw in Next Tracker. I know it's been a big disappointment for club members, but you got to stick with Shug. NXT, much cheaper than First Solar. How about we go to David in North Carolina? David.
Hey, Jim. What do you think of the amusement park company that has a Halloween festival for the next 6 weekends? Six Flags.
I got to tell you, Six Flags, I don't know. It feels like it's Two Flags. This has just been a merger from hell. I'm not really into the stock. I'm not into the growth rate. I actually prefer, I'm not kidding. I'm not joking around. I actually prefer the stock of Disney, and that is saying something. Let's go to John in California. John.
Hello, Mr. Jimmy Chill. What's your take on equity residential?
Total winner. That is just an amazing stock. It still yields. It's still got about a 3% yield. You can still make money in it. I know it's up huge, but boy, talk about a shortage in housing. Talk about a shortage in apartment complexes. It's got them all. I want to go to Nickung in Florida. Nickung.
Hey, Jim. This is Nikonj Lave from Orlando, Florida. My question to
Excellent.
you is regarding a stock with ticker symbol mRNA, Moderna. Do you see any future?
Moderna's been a big disappointment. They had all that money. I would have thought they need to come up with a personalized cancer vaccine. They need to come up with it right now. Tony in Hawaii. Tony.
Hey, Uncle Cramer. How's it going? Calling you from the North Shore of
Good
Oahu.
mahalo. What's happening? Excellent.
Hey,
love it there.
Yeah. Well, I'm wondering about a stock that you've mentioned a couple times. I picked up some at 75. It's been on a run. I'm wondering if you would buy more Vertiv on a pullback.
On a pullback, absolutely. Look, Vertiv is the premier data center stock, and it's got a chairman by the name of Dave Cody who knows more about business than 500 S&P members. And I've got to tell you, I think it's a winner. I want to go to Howard in Florida. Howard.
Yeah, hi. First time caller.
Hi.
Charter Club member.
All right.
And,
yes.
A few weeks ago, you did a segment on a company that sounded good, and I looked into it myself, and I looked to see, it looked to me like it had a significant short position for the type of company it was. I just wanted to get your opinion on how to interpret that information, and are you a buy, sell, or hold on Powell Industries?
Okay, I don't really understand the short position at all because it's a very well-run company that's terrific, that's not even that expensive. I think it may be because related, it's got some oil and gas-like exposure. I think Powell's a buy. I reiterate it's a buy, and I think it's an opportunity to be able to buy it right now. And that, ladies and gentlemen, is the conclusion of the Lightning Round.
The Lightning Round is sponsored by Charles Schwab.
first thing we do, we fix the balance sheet. That's what I thought when I read the various releases issued by Pat Gelsinger of Intel last night, including a release meant to alleviate balance sheet concerns because the company seems to have much more money coming out than it does coming in the next 12 months. Of course, what everyone's talking about is Gelsinger's deal with Amazon Web Services to provide them with next-generation chips for AI. I know it's a big win, but it's also a win that requires Intel to spend a fortune on capital equipment. Unfortunately, right now, Intel doesn't really have the money to build out everything it wants to build, or even that it's committed to build. That's why the best news we got last night wasn't the AWS news. It was Intel's suspension of its plan to build out gigantic plants in Germany, as much as 30 billion euros, and Poland, which was only going to cost 4.6 billion euros. This pause is causing great turmoil, especially since the German government committed 10 billion euros to Intel to get this mega facility up and running. It was a linchpin of Germany's attempt to keep supporting job growth, especially in the semiconductor space, now that autos have really cooled. These actions are being taken to buy time, to staunch the blading. The European pauses, along with the $3 billion Pentagon contract that it just got, helped take some of the pressure off the former semiconductor kingpin. Intel now has a moment to try to right the ship it can breathe. And time is what they really need. Until today, Intel seemed to have no idea how to cut costs while still spending heavily on incredibly expensive semiconductor foundries all over the world. The about-face in Europe lets them continue their aggressive foundry build-out in the U.S., where the company needs to hit certain benchmarks to collect on its CHIPS Act subsidies. Those are an imperative both for Intel shareholders and for the U.S. government, which has endowed Intel with a war chest that doesn't want to lose. I remain very skeptical of any real turn at Intel because so much of what they make on the high end comes down to their old x86 architecture, which many of the people I talk to out here in Silicon Valley poo-poo is out of date. That said, Gelsinger's finally making the right moves. He knows that he needs to repair the balance sheet, or else it just doesn't matter how many deals he does with Amazon. All successful turnarounds start with the balance sheet. Recently, we saw VF Corp's Bracken Darrell flip Supreme, its streetwear division, for $1.5 billion, after the company had bought it for $2.1 billion just 4 years ago. But you know what? People might have been scornful of that move, but he sold a big hit and a growth property. Wait a second. He had to. Because, you see, Bracken Darrell had to sell what he could to protect the franchise, even if it means taking a quick loss to fill the coffers on an otherwise really terrific product line. Last week, we had Gina Drozos, the CEO of Signet on, right, Signatures? And she talked about the need to fix the balance sheet first before you can engineer a comeback. Signet's turnaround from a truly hellacious place is working, mainly because of her excellent cash management as just a fundament. Of course, the biggest salvage job was one that Larry Culp pulled off at GE. When he took over, he had 6 divisions all over the place. So he had to sell some gems, like the biopharma business. He sold it to Danaher. He used to go there, worked there for $21 billion in cash, a business that was best in show. Why'd he do it? Simple. Larry said he was taking thoughtful and deliberate action to reduce leverage and strengthen the balance sheet. That was a quote right from the release. I know the loss of that fast-growing business must have hurt him, but if Culp hadn't sold it, I don't know if he could have pulled off GE's insanely lucrative 3-way breakup. It's been incredible. Now, in Intel's case, Gelsinger never said one word about the need to have a good balance sheet before you expand. That's why he now has to pause the German plant, even if it means totally alienating the German government. Obviously, it's a suboptimal situation, but at least now he's getting serious about preserving the institution that is Intel, always the first job of the CEO. Here's what I have to say to Pat. Better late than never. I like to say there's always a bull market somewhere, and I promise to try to find it just for you right here on Mad Money. I'm Jim Cramer. See you tomorrow with more from San Francisco.
All opinions expressed by Jim Cramer on this podcast are solely Cramer's opinions and do not reflect the opinions of CNBC, NBC Universal, or their parent company or affiliates, and may have been previously disseminated by Cramer on television, radio, internet, or another medium. You should not treat any opinion expressed by Jim Cramer as a specific inducement to make a particular investment or follow a particular strategy, but only as an expression of his opinion. Cramer's opinions are based upon information he considers reliable, but neither CNBC nor its affiliates and or subsidiaries warrant its completeness or accuracy, and it should not be relied upon as such. To view the full Mad Money disclaimer, please visit cnbc.com/Mad Money disclaimer.